joining us. You are on to Tax 101, your number one tax education program. So like I said before we went on that quick commercial break, our focus on the program today is on tax planning. And tax planning for the new year 2019. Tax planning, tax we all know is a cost to our business, whether we like it or not, is a cost. So here today we are looking at how can we manage this cost efficiently so that it does not become so much of a burden to our business. Joining us to enlighten us and advise us as a tax expert is Mr. Adeyemi Adediro from the Andersen Tax Nigeria. Hello, Mr. Adeyemi.
Good afternoon.
Good afternoon, and thank you for joining us again on Tax 101.
Yeah, thanks for having me.
Thank you. So, today we are talking about tax planning. As a tax expert, what exactly is tax planning, and what should this mean to us as taxpayers?
Well, basically, tax planning are measures put in place by a taxpayer to ensure it maximizes the provisions of the tax law, such that it doesn't pay tax in excess of what has been provided in the tax law and less than what has been provided in the tax law. So tax planning doesn't mean evading tax. You're actually complying with the provisions of the tax laws, but you're maximizing the benefits. That's tax planning in a nutshell.
Wow, fantastic. The way you put it, it makes it. But I know I'm still going to come back to that issue of it's not tax evasion, but complying with the tax law, but looking for how you can minimize your tax exposure as a business. But then again, what should we consider as corporate taxpayers or just as an individual when planning?
Well, basically, for any taxpayer, whether corporate or individual,
yes,
the first thing, the bedrock of tax planning is even to ensure that you are tax compliant. There is no effective tax planning if you are not compliant in the first place. So before you begin to talk about tax planning, you need to ensure that you've crossed all your T's and you've dotted all your I's with respect to being compliant with the provisions of the tax law. So before the year runs to a close, you probably want to look into your books to ensure that you've paid all the taxes that are due to the relevant tax authority, and as at when due, you made those payments as at when due, and you filed all your returns that are due to the respective tax authority. So before tax planning, you need to ensure that you have done that. You've kept proper records as well, because as soon as you file your returns in the coming year, the tax authorities will probably ask you questions with respect to the returns that you filed. So you must ensure that you've kept proper records. Then, if that is in place, then you can then begin to talk about tax plan, how to maximize the provisions of the tax law to make sure that your tax that you're paying to the respective tax authority is effective. Is not more than what you should pay and is not less than what you should pay. And what you probably be looking at is, what part of tax law actually grants you some benefits? You have, you could explore pioneer status if you're eligible, which is a tax incentive.
Yes, I would like to come in right there, because we are still going to talk about the incentives and how exactly we can, take advantage of those incentives and tax exemptions to give us more benefit as taxpayers. But before then, you actually did mention ensuring that we stay compliant with the tax law by ensuring that we pay all taxes as a full due and before moving into the new year, which is very, very key as taxpayers. And for those that have missed, or for those of us that may not have our books in place by the year 2019, what would you advise? Should they just start preparing their pen and field aside?
Well, basically, the earlier you comply, the better, because most of these non-compliance, most of these taxes, when you are not compliant, it attracts penalty and interest. So to stop the penalty and interest from counting, you need to comply as soon as possible.
As soon as possible. And for taxpayers, if you're wondering when to know your notable tax dates as a taxpayer, you can also check the FIRS website at www.firs.gov.ng and click on Tax Planner. They have a small link called Tax Planner that will show you all your notable dates and all type of taxes, their dates and when they fall due, so that you can plan effectively for it. So the most interesting and controversial area of tax planning actually is taking advantage of the tax laws and to reduce tax exposures. And we are all interested in that, but you actually just made mention of taking advantage of tax exemptions, tax incentives, such as the pioneer status, to reduce our tax liabilities. So what would you advise taxpayers?
Okay, ordinarily, to a layman out there, you may think that tax is payable on your business profits, but tax is actually payable on what we call your taxable profits. In other words, you have to do some adjustments to your business profit to arrive at the taxable profit. So it's important for the taxpayer to know what kind of adjustment needs to be made to the business profit to arrive at the taxable profit. So there are some provision in tax laws that gives you, in addition to those adjustments, certain things that you should claim as an incentive. For instance, you have pioneer status. If you are eligible for a tax relief, you could apply to the Nigerian Investment Promotion Commission for them to grant you pioneer status. So you could use that, which gives you exemption from taxes for between 3 to 5 years. You could also consider claiming capital allowance. Capital allowance, it's a deduction in your taxes based on the assets that you've acquired. So there's a way that is computed to reduce your tax payable to the government. Then you could also consider, when you provide goods and services, your customers will probably withhold tax. So at this time of the year, it's important to look at the withholding tax credits that you may have that you can use to offset your tax liability. And then for individuals, you could look at, you could have a mortgage. The tax law provides that interest on mortgage can be used as a deductible against your tax.
Really?
So you can look at that and see if you have the interest on any mortgage that's mortgage or owner occupied house. So if you're staying in a house that you've actually gotten a mortgage on, you can use the interest on it to offset your taxes. There are myriads of other incentives in tax laws that you can take advantage of.
Fantastic. And I know that for a lot of taxpayers, the problem, or rather the challenge that we are having as taxpayers, is not knowing where those advantage areas lies and how we can take advantage of it. And that is really why we need tax consultants and tax experts to handle our tax affairs. So I would always advise, especially corporate taxpayers, please get a consultant, get a tax expert to put your books together to help you look at it, holistically, and look at those areas that you can actually take advantage. That is what tax planning is all about, Mr. DMA, right?
Absolutely.
Taking advantage of the law. But what would the tax authority say about tax planning?
No, the tax authority is not adverse to tax planning, provided it's within the provisions of the tax law. So you are not evading tax, you are not doing anything illegal, you are just maximizing your tax based on what the law already provides. So as long as you abide by the provision of tax law, the tax authorities are not adverse to it.
Okay, fantastic. I just wanted us to be clear on that, so we are not doing something that is illegal or that can, earn us some form of penalties or fine in the future. But talking about penalties and fine, this also have a way of increasing our principal for a lot of taxpayers who have failed to meet up with their obligations as they fall due over the year, and sometimes it's significant enough. So as part of tax planning, do you also consider that? I know you have actually touched on this earlier.
Yeah, that's why I mentioned that there's really no tax planning that is effective without being compliant in the first place.
Exactly.
Because even if you are doing putting some tax planning measures in place, the penalties and interest from non-compliant may wipe out the benefits that you've accrued as a result of tax planning. So the first step that you put in place before you talk about tax planning is tax compliance, so that you are not exposed to penalty and interest that will wipe out the benefits of tax planning. So it's important for taxpayers to be aware of the due dates for payments of the different taxes and to ensure that they pay as at when due.
Yes, at when due, which is very key. Like I earlier mentioned, you can get your tax planner from the Federal Inland Revenue Service website. You just go to www.firs.gov.ng and click on tax planner, or you have all the dates for states, both for state and federal taxes. At this point, I would like to take a quick message from our sponsors again. When we come back, we'll be looking at other area of tax planning that will be of benefit to you in the year 2019. We'll be right back. Welcome back. If you're just joining us, you are on to Tax 101, and we've been having a conversation with Mr. Yemi Adediran of Andersen Tax Nigeria, and our center of discussion today has been on tax planning for the year 2019. As we all prepare for the new year, it's very important that we also take time to do some planning that will affect our business profits for the year 2019. So we've been talking about tax planning actually. So Mr. Adeyemi, let's look at another area of tax planning. For me, I feel that is one area I feel that a lot of corporate taxpayers especially are failing, which is also the financial readiness of companies when it comes to tax or rather tax exposure. When it comes to knowing their tax obligation, yes, they do know their tax obligation, they know the expected tax liability, maybe the average, but at the same time, they are not financially ready. As the taxes fall due, you find out that the company does not even have money to offset this tax liability. Could this be poor tax planning, or how would you advise the taxpayers?
Well, tax is a social contract, so it's important for people to be aware of their obligations, right, to the government, and at the same time, it's also important for the government to make sure that there's some form of accountability with respect to the tax paid to the government. But having said that, it's important for companies, individuals, and business owners to know that, okay, tax is an obligation that is due. The government is a stakeholder in your business, and as you're fulfilling your other obligations, that you have to take cognizance of the fact that you need to fulfill your obligations to the government. So for a lot of companies, they make provisions, monthly provisions, annual provisions for taxes that are payable to the government. And there are some taxes that are not even your money, like VAT.
Exactly.
VAT, it's not your money, you're agents of collection. So there shouldn't be so much argument with that. You are an agent of collection to the tax authorities, so you're just supposed to collect the money and remit. So it's important you don't take that money as part of yours or part of to invest in your business. So it's important for taxpayers to have the proper orientation with respect to their obligations to the government and plan around it so that they don't miss the due dates, miss the deadlines, and see taxes not as part of the business inflow, but something that they need to remit to the government.
Okay, but what point to note from what you have said is setting money aside for tax purposes. I think that is one area a lot of taxpayers, or rather one habit that a lot of taxpayers should imbibe in the year 2019, how to set money aside. Know that, yes, I have an obligation, which is tax, that you cannot shy away from. And know that, okay, if you do a proper planning, you should be able to guess what the average of your tax liability should be. Am I right?
Absolutely.
And then you can be able to plan effectively.
Provide for it.
And provide for it, so that you have something to fall back on as they fall due. But another area, like you just mentioned, is companies that invest collected taxes as collecting agents, such as VAT and withholding or consumer taxes, consumption tax, I beg your pardon, and invest it into their business, and it becomes sticky at the end of the day or the end of the month when they're supposed to remit these taxes. What would you advise them? Because this is very common within our terrain. Business owners don't just know how to separate this particular type of tax. To them, it's an influence. By the time you're asking them to pay for it, it's as if they're taking part of their profits.
Yeah. Well, first, I mentioned about having proper orientation.
Yes.
That taxes belong to the government, and your business profit is different from the taxes that you're supposed to remit to the government.
Yes.
Second thing probably starts from keeping proper records.
Yes.
You need to have different ledgers for the taxes that are coming in. So by the time you have your VAT ledger, your withholding tax ledger, it's separated from other, expenses or other inflows. You'll be able to delineate that, these ledgers or these accounts relate to my obligations to the government, and this relates to my normal business. So you're able to delineate that. And also, if you have the proper orientation, you realize that using taxes as part of your business may attract penalty and interest if you are not able to remit that to the government as and when you do. So you're actually going to incur more expenses. So that's not part of tax planning. Tax planning is a different ballgame entirely. You're looking at how to be effective in your tax payment, not to evade remitting taxes to the government. So.
Exactly. So let's also look at tax planning from tax authority perspective. Oftentimes, a lot of people, but first, is there anything that the tax authority stands to gain when it comes to tax planning?
Well, the tax authority, they administer taxes, right?
Yes.
Based on the provision of the tax law.
Exactly.
All right. So, I wouldn't say that they in administering taxes, right? They are looking out for a gain.
Yes.
What they are looking out for is for taxpayers to be compliant with the provisions of the tax
law.
law.
That's the benefits.
Yeah.
But they are trying to get a lot of taxpayers to be more compliant. So if there's an effective tax planning, it has also made their job a bit easier.
Yeah, because they are not adverse to you, maximizing the provisions of the tax law.
Yeah.
As long as it's within the confines of the provisions of the tax law. It's when you deviate from it that the taxman will come after you and ask you to, remit the taxes that are due to them. So if you've done proper tax planning by taking advantage of clear provisions of the tax laws, then you wouldn't have a problem with the tax authority.
Still on tax authority.
And the most important thing again is whatever position you're taking sometimes requires documentary evidence, right? Having proper records in place, having proper trail in place. So as long as you put all that in place, when in the event of an audit, the tax authority or the taxman won't have a problem with you sticking by your position,
Tax planning. Okay, still on tax authority. A lot of tax administrators have come to frown at tax planning. They see it as a way, some aspect of tax planning actually, they see it as a way of tax avoidance. So how do you begin to differentiate or draw the line between tax avoidance and tax planning?
Okay, maybe where there may be some contention, maybe gray areas in the provision of the tax law, where what we call aggressive tax planning. There are some provisions of tax law that are probably not very clear, maybe the way they are drafted, right? And when a taxpayer then takes a position based on his own interpretation of that provision that may be different from that of the tax authority, then you would probably have some contention from the tax authority. So that's maybe in that regard, the tax authority may not be favorably disposed to such position. And it's not bad in its entirety, because the only way our tax system can be developed is if some of these provisions are attested, and in some cases these issues have gotten to the Supreme Court, and there have been some rulings that have guided the way those provisions of the tax law should be
Interpreted.
interpreted and treated. So I don't think aggressive tax planning is bad in its entirety. It all has to do with the risk appetite of the taxpayer and being ready to defend your position in the event of a tax audit, and if the matter has to get to the court,
Yes.
you are able to abide with your position. Yeah.
Well, I think all this can only be done effectively if you have a tax expert like the Andersen Tax, because honestly, an individual can, you can defend this position even if though you know it, but for a tax expert, you might be able to say, okay, let's look at it critically. But
Yeah.
that is why we always advise our corporate taxpayers, kindly hire a tax consultant or a tax firm or an auditing firm to handle your tax matters. They are the experts, they know everything. Let them help you and put your books together. So, what would be your final advice to taxpayer before I let you go? For year 2019.
Well, the advice is simple, pay your taxes as when due and maximize the provisions of the tax laws. Don't pay too much tax than you're supposed to, you're expected to, and don't pay lesser than the law mandates you to.
Fantastic. Thank you so much, Mr. Deyemi. It's been a
You're welcome.
pleasure having you on Tax 101.
Thanks so much.
And I wish you a happy holiday as you celebrate with your family.
Thanks so much.